Thank you for watching this preview video at xm.com. We'll be discussing upcoming U.S. inflation data, the minutes from the Fed's September meeting, and the outlook for the dollar. I'm Maria Pachordevez, and joining me is Senior Investment Analyst Marios Hadjikyriacos. So Marios, the U.S. economy is continuing to show remarkable resilience. Now, back in September, the Fed refrained from raising interest rates, but revised its rate path higher. What will investors be watching for when the Fed minutes come out on Wednesday? And what can we expect from the inflation data out on Thursday? Do you think the Fed will end up raising rates one final time this year?
Hello, Maria. I actually think they are not going to raise interest rates. I think they're done with rate increases, and let me explain why. So, in the last few months, we've seen the US economy display impressive resilience. Most other economic regions, Europe, China, they seem to be slowing down. But instead, in the United States, we saw economic growth reaccelerate over the summer. We've seen the labor market remain in great shape. The consumer is still spending. So it seems like the US economy is performing much better than any other economy. And the main reason behind that, in my view, is how much the government is spending. So the US government is running a huge budget deficit. That means they're spending a lot of money in the economy. And to finance the difference, they are issuing a lot of debt. Now, when you issue a lot of debt, that tends to push interest rates in the bond market higher. And that's what we've seen play out over the last several months. We've seen yields on US government bonds going higher and higher, reaching their highest levels since 2007, in fact, since the financial crisis. And the reason behind that was how resilient, how impressive the US economy has been lately, and B, how much debt the government has been issuing into the markets. And of course, that has helped the dollar to stand tall, right? We've seen a big rally in the dollar. Most of that has been on the back of these solid economic fundamentals and the rising yields in the bond market, making the dollar more attractive from an interest rate perspective. Now, turning to this week's events, Maria, we're going to get the minutes of the latest Fed meeting on Wednesday. As you already alluded to, this was the meeting where they kept interest rates unchanged, but they signaled that they will likely keep interest rates elevated for a longer period of time. So the Fed didn't raise interest rates, but it signaled a higher for longer path for interest rates. So the minutes are going to be scrutinized on two areas. First, is the Fed going to raise interest rates again this year? And second, exactly how long are interest rates going to stay at these high levels? Now, on whether the Fed will raise interest rates again, I think that's highly unlikely, Maria, because the bond market has already done the job for them. When yields on government bonds go higher and higher, that has the same effect as raising interest rates several times. So monetary policy has already been tightened over the summer by the markets. That puts less pressure on the Fed to do more. It might be too early for this to be reflected in the minutes, but we are hearing it from Fed officials already. And as far as inflation goes, inflation is expected to have cooled down further in September. Some of that is because of base effects, but it's still good news for the Fed. So if you are in a situation where inflation is slowly but surely coming down and the bond market has already raised interest rates for you, it's likely that the Fed is in a wait-and-see stance for the foreseeable future.
Turning to the dollar now, what's the short and longer-term outlook?
Yeah, so look, we could see a small disappointment for the dollar if the minutes or if the inflation data are on the disappointing side. But overall, I would argue that the outlook for the dollar is still positive. Now, the dollar offers what I call the full package right now. It offers the highest real interest rates among the major economies, the strongest economic growth among the major economies, and safe haven qualities because, of course, the dollar is the reserve currency. So when you look at the rest of the Forex market, the euro has an economic growth problem. Europe is flirting with a technical recession, essentially. The United Kingdom is similar to Europe in that respect. China is also slowing down. And the yen has an interest rate problem because the Bank of Japan refuses to raise interest rates. So not only does the dollar look attractive, but there's also an absence of viable alternatives in the FX market. And that, I think, is something that can keep the dollar rally going.
Marios, thanks so much. This was a preview video here at XM.com.